This strategy doesn't look fast until you're 10. The system trains people to chase quick money, but the real wealth comes from playing a game that most people don't even understand. When I started, my returns looked tiny, like they weren't even worth the effort. But as I stuck with it, everything changed. If you saw my portfolio in year 1 and 2, you'd think it wasn't working. When you see where I'll be when I hit year 10, you will want to copy what I do. Everyone wants fast results, but wealth doesn't move fast. It accelerates, and the first few years feel slow, but then it takes off like a rocket. My name's Mike, and I have been doing this for just around 8 years. This isn't all of my investments. I do have rental properties, I have equity in real estate, and I have a 401k. But this is the stock portfolio that I've built in just a few years. And I'm sure if you've seen some of my other videos, you have heard the story of how I started back in 2022 when I had about $20,000 cash, and then I had also borrowed money from a paid off car. I will not retell that story just because I've told it so many times now that I don't want to bore the people who have seen my other videos. But today we're going to do something a little different. So many people like to talk about projections. Let's dive in and show why this is more powerful than growth stocks are more powerful than income stocks. So I'm currently 33 years old. Let's project out a few different projections. Let's say when I hit 43 years old. At the end, I have all of this on a nice spreadsheet so you can see everything. But I want to walk through it step by step so you can see the power of this too. So right now I have 578,000 invested. And let's say I don't invest anything else. Let's run a very conservative 14%. My anchor typically gets me 17% VGT, which I have mentioned is my biggest position. And I have over the past, say, 4 years returned about an average of 29%. A 14% is very conservative. We're going to do two different projections. We're going to do 14% and we're going to do another projection at 17%. We're also going to project the interest rate and it's going to be higher than my actual interest rate. So we're being very fair here. So let's look real quick. My actual interest rate is 5.4%. The projection we're going to do is going to be with a 6% interest rate. We're just going to round this down to 147 and we're going to round this down to 578. So let's get started. So I have 578. Let's say in 10 years that I don't add any more money. I will have 2.3 million. However, I do have debt, right? So I have 147,000 and let's say like I had mentioned 6% debt. This would cost me 267,451. So it's my balance would stay at the 147 and the reason would be that it's an interest only loan. I would be paying interest every month and I would pay this much in total if I were to cover the interest that is accrued in addition to just choosing to pay it all off at once when the loan is over. So, real quick, if we were to go back, it's 267 451. 2.3 minus 267 451 is how much I would have left if I were to pay off the debt at the end of this 10 years. This is adding no more money. All I would have to do is pay off the monthly payment for my debt. That's pretty powerful. Let's add some years to our timeline. And keep in mind, so I have a lot of money that I can continue to buy more shares with or pay off debt. So my number is going to be much, much bigger than this. 6.159. Not bad. Let's see how much it costs us. It would cost us 406, so we'd have a measly 5.5 million. Hey, not bad, right? I didn't add anything to it. Let's go ahead and change our projections a little bit. Let's do 10 years. Let's do the same 578. By the way, I don't like Dave Ramsey very much as far as the advice he gives. I don't want to wait until I'm 70 to have money, which is why I'm teaching the way that I do things, which I think is much more powerful. Let's run I want to say I did 16% return, and then we're going to do an 8% interest rate. Yeah, 16% return and 8% interest rate. So it's going to be shifting things I know it's like a 2% difference in each, but I think you'll be surprised at the outcome. So there's a difference between my total value and my debt, and it's pretty significant. So that spread is going to be even bigger here. Let's see how it turns out. This would turn into 2.8, and then my debt over the same time period would turn into 8% interest, which is way higher. My interest rate is 5.4%. So this is accounting for it being variable and maybe it goes up over time. 326, I'd have 2.5 million without ever adding another dollar if I were to pay off all my debt. Now, if we wait until I'm just 50, this will be 578 and this will be 16%, 8.6. Now, let's check out. So many people I see like to run these projections, and I'm just here to show you that this is actually more powerful than the people who like these income stocks might realize. So this gets you to 8.3 at the end of everything. Before we jump over to the spreadsheet, I want to check a 5-year longer time horizon for both. This isn't going to be in the spreadsheet, unfortunately. I'm just curious because I know time is one of the biggest things for compound. So 12 with just a 14% return, 19 with a 16% return. Like I could be working a part-time job to pay this debt. And in addition to that, remember that I'm actually not accounting for any of the interest, any of my dividends paying towards the interest is what I mean. So what I mean by that is my dividends pay about a third of my debt for me. So this is very, very powerful. So here is everything on a spreadsheet. Here's my first couple projections, and then we have my second ones after. So what I have here is the total amount invested, and then I have the age, like what it ended up being. Here I have the ROI I used, how much money I added, which was zero everywhere, and then 6% return or 6% interest rate. And then here I have what the debt started at. Everywhere you'll see 147, and then you'll just see how it changed at each age. So the total after accounting for debt is the number that everyone here is going to care about. So here from 33 to 43, if I don't add any money and I have a 6% interest rate, a 14% ROI, I will end with $2 million. That is just making the debt payment every month, which is very small. Then I will have at from 33 to 55, same interest rate, same ROI, we will have 5.7 at the end of paying off, selling some shares to pay off my debt. And then if I were to change my ROI and actually no, so this is just changing my ROI to 16%. So this is pretty conservative. My anchor averages 17%, and also the way I buy while the price is going down. Right now I'm actually not buying any shares. I'm paying off margin and I'm waiting for the opportunity when share prices go down to buy more shares. So I won't say I'm exactly timing the market because I'm always fully invested, but I do sort of time the market and it does get me very outsized returns where when the market's going down, I'm buying in large quantities quickly when some people might miss that opportunity or they might dollar cost average and get a kind of waste the opportunity, so to speak. So imagine that you have like a 30% discount, like the price has gone down 30%, you're in a bear market. If you were to put $1,000 in every month, you might get $12,000. Hooray, right? Eh. So I would rather use debt and then I'll have the opportunity to get maybe $100,000 worth of shares in that same time, and I got it at a 30% discount. I'm like going to the store and I'm like buying, you know what I mean? So here, let's check out these projections here. So we have 578, and then it's you end up with 2.5 mil with your 16% ROI from age 33 to 43. From age 33 to 55, you end up with 8.2 mil with the 16% ROI and a 6% interest rate. At the end here, I have a 8% interest rate and the same ROI. I don't change my ROI for either one. You have 1.7 mil from age 33 to 43 without adding another dollar, and then from age 33 to 50 without adding another dollar with an 8% interest rate, you get 5.5 mil. From age 33 to 43 with a 16% interest rate and an 8% ROI, you have an extra 500K from up here. And then you have an extra 2.5 mil from age 33 to 50 without adding another dollar. Of course, I'm going to continue to invest. These numbers will get much, much bigger because I'm going to put in everything for like 10 more years. I'm going to be stacking, and you guys get to watch the journey. So, to give you an idea of what that might look like, let's say until I'm 43, let's say I'm at 578, and honestly, I've just been putting in a lot. So, let's say it's 10 a month. Let's say I get a 14% return. I might have 5 mil. I think it's going to be faster though. I really do. You're going to have to stick around and find out. I think in like 3 years, I'll be at 2 mil. And then if I get a 16% ROI, we're looking at 5.7. And yes, this doesn't account for the debt, but let's check this out. Let's go to 55. And I probably won't continue to do this 10 the whole time. And I do lump sum quantities often. But if I do this, boom, 14% ROI, 14 mil. Not bad. Am I right? And 19 mil. This is the power of growth. Total return is all that matters. I don't mean to be a hater on the people that like income stocks, but you are leaving so much on the table, and I wish you could understand it. I hope that this helps you understand how much you're leaving on the table, and I hope that you perhaps take a look at your own numbers and see what opportunity you might be missing. So, if you got some value from this, make sure to comment, like, and subscribe. Make sure to check out my other videos. This is just one of the many good ones.